Hey guys, Dennis Sepulveda here from Remax Crest, and I'm here today with my good friend Karen Gibbard from Gibbard Group Financial, and we're going to do a little quick talk about mortgages today and a little catch up because it's been a while since we last spoke. So Karen, first thank you so much for being here. Really appreciate it. Always great to have you here. So we want to talk a little bit about the changes that the banks are making because of COVID-19 and what's happened since we last spoke. So I know a lot of people right now are having trouble with job security. That's kind of the big issue right now. So let's just go through a few different scenarios and just kind of explain what the banks are doing.
For sure.
So let's start off with the easiest one, which is, let's say your job hasn't been affected by COVID. So what do people need to do to ensure that they're going to get a mortgage?
Right. So the main thing that the lenders want to make sure of is that the job stability is still there, that you're going to have a job. The last thing they want to do is give you a mortgage today and then you postpone it tomorrow. So they're really doing their due diligence to make sure that A, you're making enough income, but B, that you've got the job stability to support those payments over time. So when you're getting ready to present your documentation to a lender or a broker for your mortgage, you're going to want to make sure that it's very up to date. Lenders probably are not going to accept anything older than 14 days at this point. Your pay stub, your job letter, exactly.
So they want to know that these are very current employment.
That's right. They want to make sure that pay stub isn't your last pay stub from that job and that you just haven't come forward and said that you've lost your job. Be prepared, maybe prepare your boss or whomever wrote the job letter, that the lenders will be calling that boss and asking about your job stability and confirming everything that's on that letter. And there's just going to be overall more questions from the lender regarding income and specifically job stability for an employee.
Absolutely, yeah. I had a same situation with one of my clients, and they called his employer and basically interviewed him to make sure that he was working and then he was going to be, continuing to work at that job. And they asked him a whole series of questions. Right. So a really good tip is to don't piss off your boss right now. You want to keep them on your good side and maybe give them the heads up that they might be receiving a phone call from
100%. Because we've had issues where the employer doesn't know why is TD Bank or whomever calling and they don't call them back. Well, it slows the whole process down because the lender won't approve the mortgage until they're confident that the income is made.
And that could collapse the financing if they can't get through. So you want to make sure you have that lined up ahead of time. So excellent tip. Let's move on to the second situation. So let's say you've been temporarily furloughed. So your employer says, we're going to just lay you off for a couple of months until we can get our footing and then go back.
Right.
So what are the banks doing in that situation?
Right. Now, this is a bit trickier because each bank treats it slightly differently. But the main thing is they want to make sure that you have a job to go back to. So that person, the manager, can write a job letter saying that you have an expected date to come back. They want to, ideally, the lenders want to make sure that you are back at work before they fund the mortgage. So if you find a place today and you're not working, but you're guaranteed to go back to work in a month, they want to make sure that you are back to work before you actually close on the property. So you might close on it in 6 weeks, let's say.
Yeah.
So that you can show a pay stub that, I said I'm back to work in a month. Here's my pay stub showing I'm actually back to work. And the lenders, of course, are going to call to confirm that, yes, that's the case.
Yeah. Now, there's a huge risk there as well. So just because you've been laid off and your employer says you're going back in a month, anything can change in this environment. So you don't want to take that risk. You want to make sure you haven't removed your subjects until you're back at work. You don't want to just rely on...
That would be the safest for sure.
Okay, so let's go to the third situation. Let's say you've lost your job because of COVID. It's through no fault of your own, but you're not working anymore. You're still collecting the CERB, the Canada Employment Response Benefit, to $2,000 a month, and you're pretty confident you're probably going to get a job in the near future. What can those people do, and what are the banks doing in those situations?
Right, so the banks will not use any kind of employment insurance or anything like that to help qualify for a mortgage. So that $2,000 a month is not going to help you qualify for a mortgage. That's out.
That doesn't count as income.
That does not count as income for qualification on a mortgage.
Okay.
So ideally, you're going to have to wait until you get a job and you get off probation. All the kind of standard things.
Yeah. Probation is an interesting one too. So that's something people they forget about. So if you're starting a new job, you're usually on a 90-day probation period.
Correct.
Yeah, so you're going to have to wait till you pass that probation period. Well, awesome. Thank you, Karen. That's a lot of information and fantastic information. So if you guys have any questions, just call Karen directly. She's the expert. She can walk you through any of the situation that you have. Thank you so much. And if you guys have any questions, also reach out to me. Take care, you guys. Thanks for listening.
Bye.